Time now for a look at the day's business news, and we're joined in studio by Brian Quinn. Brian, we're going to start, I believe, with the troubles at Air France, at KLM, ongoing strikes affecting really not just the French side of the business anymore.
That's right. Shares in Air France KLM took a nosedive Monday following comments from the French government that it won't bail out the airline as losses mount from those strikes. Air France is, of course, just one half of a French-Dutch partnership. And while French employees are sticking together, they don't have a lot of support from staffers at their sister airline, KLM. Charlie James reports.
They're not striking, and they don't work for Air France, but they are also paying the price of the conflict. KLM employees don't accept that the crisis is penalizing the entire group. In just a matter of weeks, French labor action has already cost the company dearly.
300 million loss additional on the strikes will be less available for investments in new planes, in new technology.
They also have reservations about their French colleagues risking their jobs.
It's not reasonable, I think, at this stage, no.
We're not in the right position to make these movements right now.
The two companies merged in 2004. At the time, it was KLM that was having difficulty, but that's changed. Today, Air France is bigger, 48,000 full-time employees compared to KLM's 28,000, and it's less profitable. In 2017, Air France represented 39% of revenue versus 61% for the Dutch airline. Beyond economic performance, management is divided and very different.
In the Netherlands, it's more of a German model, a capitalist system that includes collaboration between business and society. They don't understand very well why the French are always striking. It's hard for them to sympathize with.
As at Air France, the employees of KLM have made efforts to improve the competitiveness of their business. Pilots' salaries, for example, have been frozen for 3 years.
Well, to Argentina now, where the peso appears to have stabilized for the moment. A run on the currency last week saw the peso hit a historic low against the U.S. dollar. On intervention by the country's central bank sent Argentina's key interest rate up to 40% and reduced private banks' dollar reserve requirements. The central bank has now sold off some $8 billion from its currency reserve and pushed other banks to do likewise. Analysts are hopeful that the measures will be effective in halting the most severe turbulence in the currency market since 2015.
The government has forced banks to sell approximately $1.8 billion to the market, and this has calmed momentarily the exchange rate.
It's time now for a check on the markets. Asian indexes trading mostly higher Tuesday following a strong session on Wall Street Monday. We see the Tokyo Nikkei with some modest gains there. Shanghai Composite up around 0.2%. Hong Kong's Hang Seng up over 1.25% on gains in the tech and energy sectors. Kospi and Seoul losing a bit of ground despite a rally in Samsung shares there. Well, once again, oil is big on the minds of U.S. investors as Donald Trump gets set to announce whether or not that country will stay in the Iran nuclear deal. Prices falling a bit from their 3-year highs yesterday. WTI is back down under the $70 mark, but Brent crude staying above the $75 marker. While Trump's looming decision on that Iran nuclear agreement could put billions of euros worth of business deals at risk, companies in the aircraft, automobile, and oil sectors have invested heavily in the country following the removal of sanctions. But any return to pre-deal sanctions could torpedo dozens of deals made after the agreement came into force in 2015. Andrew Hillier has more.
The 2015 nuclear deal stripped away sanctions and opened Iran up for business. Airplane manufacturers were among the first to take advantage, rushing in to replace the national carrier's aging fleet. In December 2016, Europe's Airbus signed a deal to supply Iran Air with 100 jets for 16 billion euros. The company's US rival, Boeing, also struck its own deal with the Iranian flag carrier, worth around 14 billion euros. Whilst Airbus has already supplied 3 planes, Boeing has yet to deliver a single aircraft to the country. Unlike airplane makers, oil companies were slower to invest after sanctions were lifted. But last July, French oil giant Total signed a deal worth more than 4 billion euros to develop the country's South Pars offshore natural gas field. It was the first commitment made by a major oil firm in the wake of the nuclear deal. Anglo-Dutch company Royal Dutch Shell also signed a provisional agreement to explore 3 of Iran's biggest oil and gas fields. European car makers have also piled into the country's market. Both Peugeot, Citroën and Renault have signed deals to open factories to produce hundreds of thousands of vehicles a year. Germany's Volkswagen has also begun exporting cars to Iran. US policy on Iran has huge implications for companies who have already invested in the country. Any multinational corporations that operate inside the US have to abide by US rules about doing business with foreign countries.
France 24's Andrew Hillier there. Well, finally for business, unemployment here in France is at a 9-year low, just 8.6% in mainland France at the end of 2017, after years of hovering above 10%. That's good news for French job seekers, but in an ironic twist, those job seekers could soon be joined by the people whose job it was to help them find work. France's national unemployment agency, the Pôle emploi, has announced a plan to lay off 4,000 agents over 3 years in response to falling jobless rates. That move comes amid new rules allowing resigning employees to claim benefits, which could actually add to agency workload. Pôle emploi hasn't finalized those layoff plans. They'll be taken up at a meeting with unions in late May. Who knows what we'll see there, Eve? Perhaps a strike at the Pôle emploi.
It's a pretty cruel, ironic twist there at the end of that story, Brian. Thanks a lot, though, for that business update. Brian Quinn there with all the business news.